Hi, this is Ray Halstead. Today we're going to talk about shareholder compensation for S Corp owners. I'm here with Andrew McMillan. We're with REH CPAs, a CPA firm here in Mooresville, North Carolina. Andrew, we deal with a ton of S corporations. Being a firm that does a ton of small business accounting and tax work, we see a lot of S corporations because it's a really popular entity from a tax planning standpoint, also from an asset protection standpoint. And one of the biggest questions that we get whenever we get that S Corp owner in is, well, how much do I pay myself? Because the IRS has this reasonable compensation standard. So how would you answer that? If, say, I'm a small business owner, I come to you and I say, Andrew, how much should I pay myself on a W-2 wage? Or do I have to pay myself on a W-2 wage?
Well,
because a lot of times it's like, do I have to?
yeah. Well, yes, you do. Like you said, the IRS has a mandate out there, a rule that says as an S Corp owner, you must pay yourself a reasonable wage, a reasonable compensation. So, you know, it can be subjective. It's opened up to interpretation in a lot of different ways. But what I usually like to start out with, just to get us in the ballpark, is what would you pay someone else to do your job if you weren't there? Right. Someone that takes on all the risk, all the responsibilities, all the duties that you have to deal with on a day-to-day basis. What would it take to pay someone to do your job? That gets you in the ballpark. That gets us in. It gives us kind of like a starting point to start figuring out where that wage needs to be for you. But you know, a lot of times you kind of start talking about, well, you know, what kind of training and experience do you have? What are your duties and responsibilities? How much time and effort do you devote to this business on a yearly, monthly, weekly, day-to-day basis? Those are all things that help you start figuring out what a reasonable wage should be for yourself. It's again, it's not. There's not like it's not a black and white.
It's not.
It can be interpreted a lot of different ways.
And it depends, right? Because in a lot of this, in the tax world, it depends.
It does.
Because if your business is losing money and you can't pay yourself, well, then 100% you can't pay yourself, right? So they're them saying you have to pay reasonable compensation goes out the door if you can't pay yourself. So if your business is not making any money, then obviously you can't pay yourself. So we're really talking from the standpoint of a business that's thriving and making money. Those guys.
Yeah, and a lot of times no one wants to pay taxes. I get it. Or we all want to pay as little as we have to.
Because the biggest thing is the FICA tax.
The biggest thing is the FICA tax, because what you're avoiding by not paying yourself a wage is you're avoiding paying the payroll taxes.
Social Security and Medicare.
So those taxes are not all bad, because what I always like to make sure clients know is we're all going to hopefully retire one day. And when you retire, how much you receive in Social Security benefits is indicative upon how much you've paid in throughout your working career. Right. So if you're, for example, I've had clients before that, you know, they're nearing that retirement age, but they for whatever reason have not paid any money into Social Security. They had an S Corp, they weren't paying wages, or they just weren't doing things entirely correct, and now they're looking to retire, and their Social Security benefits, stuff that they were banking on, is just not what they thought it was. So it's important to understand that you need to pay yourself a reasonable wage for an IRS mandate, but also to maximize your Social Security benefits that you get when you retire. So.
Right, and it depends on strategy as well. There's a different reasonable comp strategy for somebody who's netting $300,000 versus somebody who's netting $50,000.
Right.
Exactly. So it's a different strategy.
Yeah. So
it's something where it really needs to be looked at.
It does. Like I said, it's not a black and white answer. It's a little bit of a gray area in some areas. You know, the IRS does have some court cases that kind of point us down the right road to what they're looking for. So we can certainly help you do that. It's something we deal with a lot.
Yeah.
So if you're curious about where your compensation level needs to be, I mean, just reach out to us. We can. Yeah,
absolutely. Especially this time of year. You know, we're coming into year end, and we're really starting to look at our S Corp owners' compensation and see if they have enough withholdings to cover their income, things like that. Doing a lot of tax planning for S Corp owners. So you know, if you have an S Corp and you're concerned about reasonable compensation and how much you're paying yourself in taxes, we're doing tax planning now. So feel free to reach out to us so we can get some tax planning done. All right. Awesome. Well, thanks, Andrew. That was very useful information.